Good morning traders and welcome back to SDL Trading Academy. In this video I'm going to make an update on the current situation that we are seeing on Ethereum from a top-down multi-time frame perspective. So here on Ethereum on the monthly time frame, as I've said previously in my previous breakdowns, we had a very important change of structure. And the change of structure I'm referring to is this level here. So exactly here, this was previous monthly resistance, which should have acted as support all across this zone. The market broke this resistance to the upside. Therefore, we should have seen a retest and a rejection from this new level of support. But instead, the market broke it to the downside and formed a new lower low. So the market formed a new lower low below exactly this low here. And this is where we had a change of structure from a monthly perspective. And I made a video when the monthly candle closed on March explaining why we expected one more push to the upside and then the bearish continuation. And that's exactly what the market has done. So here on the monthly time frame, what we have is a bearish impulse, correction, continuation pattern. This is a high probability pattern, especially from a monthly perspective. If we take our Fibonacci from the high to the low of the monthly correction, the minus 0.272 will be our downside target. And I see this price. This is an inevitable price for Ethereum. It is almost guaranteed that we are going to at least hit this level before we start to see a bottom in the market. We could go lower. We do have another level of previous monthly resistance turn support all across this zone. So we could in fact go lower. Obviously, that will we will make an update when the market gets there. For now, we are making this bearish continuation, and we do expect the market to reach these prices. If we now drop down to the weekly time frame, what can we identify from a weekly perspective? So here on the weekly time frame, similar situation to BTC, obviously, with the correlation. The market formed this double bottom formation exactly here from a weekly perspective. Then the market made this impulse to the upside, which would have induced many bulls into the market. So the market printed this double bottom formation, a new higher low. So we have the low, high low from a weekly perspective. We obviously have this trend line. So the market produced this double bottom formation and pushed to the upside, breaking above this neckline. So this was a massive inducement. So this was a huge liquidity inducement, which induced traders to open long positions. And their liquidity was below this lows. And as you can see, the market made this fake out and then pushed to the downside. And we did capitalize on this move. We did close it too early, but we did take some very good profits. So it does not matter on this move to the downside. So now what we can see from a price action perspective, the first thing I can identify easily is we have a nice level of weekly support exactly at this area. From this price previously, the market pushed to the upside. Again, from here we pushed to the upside. So once again, we are testing the same level of demand which pushed the price upwards previously. So here on the weekly time frame, as I just said, we're testing demand. We also have 6 consecutive weekly bearish closes. And after such bearish momentum, what you would expect is a bounce, a relief bounce, a correction. After a bearish impulse, you would expect to see a correction. Despite how bearish the current market conditions are, I do still expect to see a correction. Also here on the weekly time frame, we can identify this very important level of supply. So this green candle here is the one green candle which is not related from this impulse to this, from this high to this low. So you have a bearish impulse from this high to this low. This green candle is not related to the move, so this will act as a level of structure. We see the fake out above this zone and then break back below. Usually when the market makes a fake out and breaks back below, it will go for a retest of the previous resistance, once again resistance, before seeing the continuation to the downside. Also on the weekly time frame, we have this impulse, this correction, and we definitely expect the continuation. Again, as I said previously, from a monthly perspective, we take our Fibonacci from the high to the low, and we can identify that the market, the minus 0.272, lines up beautifully with this level of institutional demand, and we have not hit this price. So although we do expect the market to come into this level before we start to see a bottom in the market, as I said, we could go lower. What we have from a weekly time frame, the market's testing demand. We have a bearish impulse. We have a huge bearish momentum. And we do expect a corrective move. We have this impulse to the downside. Now, if we want to measure the retracement, we take our Fibonacci from the high to the low. And at the moment, obviously, this impulsive move has not yet finished. We do not have any confirmations that this bearish impulse has finished. We are testing this demand. If we, like I said, if we take our fib from the high to the low, we can identify that the minus 0.618, which is the golden ratio, lines up perfectly with the level of weekly supply, which I've just identified. So we have a confluence of supply all across this zone. This is a very strong price for sellers. You don't want to be looking for sells from a level of demand. You want to be looking for sells from a level of supply. And in a bearish market, you don't sell at lower lows. You wait for a pullback and a lower high to form, then you look for sells. Especially because retail traders tend to follow the market. Because we have seen such a bearish move to the downside, now retail traders will be looking for shorts. Usually you should do the complete opposite. You should be looking for buys when everyone is looking for shorts, and obviously vice versa. We are testing demand. You don't want to be shorting from demand. So with that being said, we have the impulse. We expect a corrective move before we can see more continuation to the downside. If we drop down now to the daily time frame, what can we identify from a daily perspective? So as I said, this is the fake out to the upside, which we capitalized on. You can see the M formation and then push to the downside. So here on the daily time frame, we know we have very strong weekly support, weekly demand all across this area, and we do expect it to hold and act as a strong level of support in the market. Also on the weekly time frame, we have this daily bearish impulse from this high to this low, which broke below exactly this level of support in the market. So from a daily perspective, even on the daily time frame, we have a massive bearish impulse, and we do expect a correction from this level of demand to at least go and test this level of previous daily support turn resistance. So this is a key point in the market. As I said, we do expect the corrective move. If we take our fib from the high to the low of the daily impulse, we can identify that 0.618 from a daily retracement perspective lines up beautifully with this area of previous daily support, which will act as resistance. So here is where we will be monitoring the market very closely. We have this descending trend line exactly here. So if you just make that a little bit more accurate. So we have a nice descending trend line exactly here, which lines up with this level of previous support turn resistance. So we do expect a bounce from this level of demand. It's very stupid to be looking for shorts from this level. So if the market follows my projection and it makes a bounce, a daily correction into this level, this is a key level to be looking for. We could potentially look for shorts depending on how the market reacts. But remember, I said that we could potentially see a weekly correction. The 0.618 lines up beautifully with this level of weekly support. So all inside of this area, we will just have to monitor price action. Remember, trading is reactive, not predictive. We definitely expect at least a daily correction. We could see a deeper retracement all the way back up to this level here. Now, why could we see this? Apart from all of the reasons that I've just identified. If we go and take a look at the Dixie, the USD index, we know the opposite correlation between the cryptocurrency market and the US dollar. And here on the US dollar, we are testing multi-year supply, which is an extremely strong level. So from January 2017, this is a extremely strong level of supply, an extremely significant price on the Dixie, and we expect a rejection. Also here on the monthly time frame, we are overextended after this bullish impulse, and we expect a retracement. On the weekly time frame, we have had obviously 6-7 consecutive bullish weeks, and we do expect a retracement move, and we are testing a very strong level of supply. So if the dollar, which is very overextended, starts to make this correction, you can see here on the daily time frame, we have this potential M formation, which is forming. If the dollar does make a corrective move, if we take our Fibonacci from the low to the high of the impulse, we can identify that the 0.618 lines up quite nicely with this level here. So we could for sure be expecting a corrective move sooner or later from the dollar. And if the if the dollar makes this corrective move, then this will obviously allow BTC and Ethereum to make a bullish correction. So going back to Ethereum, as I said, on the weekly time frame, we have this bearish impulse. We could see a daily correction to this level, then look for shorts. But we will monitor price action when the market is in this level. As I said, if we do see a deeper weekly correction, this is the key area to be looking at loading up shorts. And we can clearly identify the structure that is potentially forming here. So we have the fake out to the upside. We are testing demand. We have a bearish impulse correction. If the market will make a weekly correction to the 0.618, which lines up perfectly with this level of supply, the market will also form this beautiful head and shoulders formation with the left shoulder, the head, and the potential right shoulder. So this is a huge bearish head and shoulders formation that is potentially lining up, and I do expect a relief bounce. How strong are we going to see a relief bounce? That depends on the fundamentals, the macro situation. As I said, we are very overextended. We're testing demand, and we definitely expect a retracement. On Wednesday, we have CPI data in the US, which is a high impact news event, and this could trigger the start of this weekly correction. The market is opened very bearish, as I did mention in my BTC update last night. We did expect a very bearish open in the market. But the market does tend to open and change directions. So here on the weekly time frame, we can identify 90% of the candles have a wick in the opposite direction. This is because when a weekly candle opens, it tends to open in the opposite direction that it will close in, and this leaves a wick to the other direction. So the market is open bearish, but we are testing demand. So we are definitely going to be looking for a midweek reversal to capitalize on this corrective move. As I said, how deep of the correction is going to be, that is unknown at the moment. We will obviously monitor price action from a daily perspective. When the market starts to make this corrective move, we will monitor price action firstly, all inside of this area. Remember, if the market does break above this zone, we have this descending trend line exactly here. And if the market breaks above, let's just delete this messy head and shoulders a second. You can clearly see the structure anyway. So if the market makes this corrective move and it breaks back above this zone, what is this going to do? It is going to induce bulls into the market. And we all know the market needs liquidity in order to move. So there is no liquidity. The market has just stop hunted a mass amount of shorts and longs. A mass amount of longs and some shorts. So with this move to the downside, the market hunted a huge amount of longs, high leverage longs. And now the market needs to collect liquidity in order to make the move to the downside. So if on the daily time frame, this area of support, area of resistance does not hold, and we break it to the upside, this will induce a huge amount of traders who are trying to capitalize on a trend reversal because the market has broke above this descending trend line. But we know we have an extremely strong level of supply, extremely strong level of confluence from this area. So we can expect the market to reject this zone. So this is what I'm expecting on Ethereum. Obviously, the market could reject this area here. It could reject this area here and start to make the move to the downside from this area. But if we break above, we will definitely still be looking for shorts. This is my perspective on Ethereum. So obviously trading is reactive, not predictive. We can't just take a long from this level of demand. We have to wait on the lower time frames. And at the moment, on the lower time frames, everything is bearish. We have no indication that the market is going to start to make this corrective move yet. So at the moment, we are on the sidelines and we are waiting for one of our valid entry confirmations to first potentially capitalize on this corrective move. And then as I've said a number of times, we will be monitoring price action all inside of this area for potential shorts, or we will be monitoring price action if it breaks above this area for potential shorts all inside of this zone here.